Good afternoon, everybody. Welcome to TraderMerlin Show. Sorry for the late start, getting a couple little things set up for the show for today. Hope you all had a good session out there. Okay, one for me. Lisa, we didn't start yet, but we're starting now. Here we go with the 28th day of August. Kind of interesting. I was watching the GDP numbers as they came out this morning, and it was like, oh, rather interesting because it throws a little bit of a monkey wrench in the discussion on Fed rate cuts. Right now, we know that the big discussion is on rate cuts, and will that happen at the September 17th meeting? Who knows? I'll show you that here in just a second, but I wanted to start off with that GDP number, the preliminary GDP. I guess I could go here and say that's the show thumbnail to start. Honestly, pretty darn good. Historically, we'd like to be much higher on GDP, obviously, but 3.3% is actually rather respectable, and this is an annualized rate. It's really, I know. Oh, my YouTube is the worst. My stream never starts when Merlin starts. Well, usually I try to start right on the dot, but I was like a minute late today, so my apologies on my tardiness. It happens. Every now and again, I get a little tardy. You know what happens. I was really going to try to do a bit more calculation here for you on this GDP data. And the reason for that is you can see the previous number says 3%, and then 3.1, and then 3.3. And it really boils down to me to just confusion on how they calculate this all out. Because here is the previous readings for it. You can see the previous was a negative 0.2. The previous was a 2.3. Before that, it was 2.8. Before that, it was 3.0. Now, what's strange about this is, if I were to take those four numbers and add them together, that would give me 3, 4, 5, 6, 7, give me about an 8.1%. That wouldn't work, right? That would be an amazing GDP ratio, but that doesn't count. So then maybe the other thinking is that these are annualized rates, and what we need to do is take those and divide by 4. Okay, we'll try that. You take 3 plus 2.8 plus 2.3 plus negative 0.2, and you're looking at a number that's probably around 1.9 would be my guess. So how on earth did they get this 3%? It's just a weird number. I still am somewhat perplexed on how they actually get that data. So I wanted to talk about that briefly, go into some of the details of it, and it was just interesting seeing where we saw big increases and where we saw big declines in GDP. Now, of course, we've had this discussion many times on how do we trust this data? What is the data that is coming out? Is it actually true? Is it modified? Is it twisted? I don't know. But you just go here, personal expenditure. So gross domestic product, you can see the numbers are already different than what we saw on the previous page. I'll try to zoom in here so you guys can see it. There we go. So they're showing 3.3%, but as you saw in the previous slide, they said it was negative 0.2. It actually was negative 0.5. So what are you guys calculating out here, and whose numbers should I trust? Numbers that did show wild fluctuations I thought were interesting was this GDP line, durable goods orders line right here. And if you go just into early 2024, so let's go the past 6 quarters, it was negative 1.8, then jumped to 5.5, then 7.6, and then 12.4. And as we got into Q1, we had a negative 3.7. I think that had to do a lot with tariffs. And maybe this jump we had in December, or the fourth quarter of last year, maybe that was driven by people expecting these tariffs, knowing that maybe Trump was going to win this and all heck was going to break loose with regards to the tariff war. So I thought that was kind of interesting. Other numbers that jump out here, at least for me, was this massive contraction in gross private domestic investment. So we've heard so much about these major companies making monstrous commitments to infrastructure, to building out the United States. And it's like, okay, great. I think we'd all agree. Let's do it, right? The more we can get domestic construction, domestic investment, the better it's going to be for the United States. So when you heard about, this $500 billion investment from a lot of the Magnificent Seven companies and now another $100 billion by Apple, like, okay, cool. That sounds really good. But looking at the numbers here, it's kind of strange and honestly extremely volatile. We had a 23.8% increase in Q1 in gross private domestic investment overall, and a 13.8% contraction, a negative 13.8 for Q2. That's not good. Obviously, we want to see more private domestic investment numbers surging. And where it fell short was really a decline in fixed investment. You had non-residential was sliding. You had structures were declining. You had equipment was declining significantly. The only one that moved up there was intellectual property products. So that is some of the bad stuff out there for GDP, Net exports of goods and services. Of course, we would expect that to be all over the place. Notice the change here. The 37.9% increase in imports, net imports, in Q1, and now we have a negative 29.8% contraction in Q2, right? These aren't like mild swings. The one that really is crazy is if you look at that was exports, that was overall imports. If we look at just the imports of goods, Q1 had a 51.6% increase, and Q2 had a negative 34.6%. So the reason I bring this up is there are some people in the audience who are like, Jerome Powell's an idiot. He's got to start lowering rates. He has to. Why is he not lowering rates, right? You bang the table going, come on, man, you've got to lower rates. And of course, President Trump is fueling that argument. But when you look at data, and remember, the Fed says they're data dependent. And I know what my audience will tell me right now, and you guys should already be typing it in, Merlin, GDP is not one of the Fed mandates, right? You're correct. But this certainly is in the head of Jerome Powell, because when we go from a 51% increase in goods imported to a 34% contraction, how difficult is it to forecast economic data when you have wild swings like this? I mean, that is a colossal swing. Now, if we look at some other data, you can see, services. Obviously, we're not so concerned with services because those numbers have remained constant for 2 quarters, negative 6.3, negative 6.0. Government consumption, all right? National defense, we had a decent, these are kind of, yeah, exactly, Steve, only an 80 percentage point swing. And you're not dealing with small numbers. This is hundreds of billions of dollars that is impacting the economy. And to me, it's just, this is where I kind of have to backpedal a little bit and say, you know what, I'm happy Jerome Powell is holding on here. Market says the market didn't care, all-time high. Exactly. I mean, the market doesn't care. I also threw this together for you. I added a new column, or new row, if you will, not column. And this is our grid that we're looking at to kind of get an estimate as to what the Fed may do with regards to rates. And anything in green is an argument for rates being cut. Anything in red is an argument for rates being raised. Anything in yellow would be arguments for rates staying the same. Now, we do have a core PCE price index number coming out next week, which is going to be very, very, very important. But you notice now we're getting mixed signals here. And this is where it becomes extremely challenging for Jerome Powell to make a clear decision. Now, we do know that there's several members on the committee who are already saying, hey, we should have rate cuts. You also have some members who are saying, hey, we should keep rates right where they're at. So Andre says these figures need to be seasonally adjusted. Seasonally adjusted. I love that term. I was cooking dinner the other day, and I found a recipe I liked, and I'm like, all right, let's try this out. And it had all these ingredients, and one of the ingredients was salt and pepper. And at the very end, it's like salt and pepper to taste. Well, could you just tell me how much is there? Oh, I'm sorry. Yeah, you're right, Liz. It's Fridays. The core PC is tomorrow. You're correct. Yep. You're correct. It's the unemployment numbers that's next week. So, when you say need to be seasonally adjusted, right there, I already feel like, well, the data is going to be even more manipulated and tailored to fit an agenda, because what sort of seasonality adjustments are you doing? How's that calculated? It's one thing to calculate out these indexes as it is. Now you're going to seasonally adjust it and modify those numbers. So we will get that the fifth line item here. Well, they are ingredients, Mick. Cooking, salt, and pepper are an ingredient. Anything you add to that dinner is an ingredient, right? It has to be salt and pepper. I'm not exactly sure how they do the seasonal adjustment, Steve. I'm not sure there at all. But I think this will be very telling. And remember, this will be the final core PCE price index we get before they make their announcement. So this is the last time we're going to see that number released before the Fed comes out and says, hey, we're either going to raise or lower rates. And I'll show you what they're talking about right now. Hey, lemon juice is an ingredient. You must be a cook. In my opinion, anything I throw in that dinner is an ingredient. But okay, I'll take your word for it. Here is where we stand today. Not a lot of change. There's only a 12.8% chance that we're going to see rates stay the same, and an 87.2%. Now, tomorrow, this could certainly change significantly, right? This could be wildly different by the end of day tomorrow based off what that core PCE price index number is, which comes out before the markets open. So exciting stuff. Again, we'll keep updating this one, and as we get into early September, we'll fill in these final columns here, and as we get to that September 17th deadline where they decide to cut rates or keep it the same. I still kind of feel like they're going to cut rates because they want to stimulate near the year end. But I'm definitely a little bit pessimistic when I look at that. That PPI number was just devastating. And of course, it will change. All right. Big Ev asked a great question. What was the deal with announcing the GDP on the blockchain? Great question. So, who knows if that will actually come to fruition? And there's a couple different things there, right, Big Eb? If we are going to see the government releasing data reports on the blockchain, because that way they can't be tampered with, they're final, once they're there, they're done. Is it that big of a deal? I don't think it's that big of a deal, honestly. Doesn't make that much of a difference to me, whether it's on a blockchain or traditional systems. That blockchain is just simply a record-keeping system, so who cares? It's not a big deal. What is important in that announcement is the government acknowledging the use of blockchain for government purposes. So what I was immediately trying to find, and I did not find it, is which blockchain are they going to be using to disseminate this information? Is it going to be Ethereum? Is it going to be Solana? Is it going to be Cardano? Because remember, if they start taking GDP data, which is the Bureau of Economic Analysis, I believe, the BEA, if they take that, let me make sure 100% here it's a BEA. I always believe it is, but I like to make sure my facts are straight. Yeah, it's the Bureau of Economic Analysis, BEA. If all of a sudden the BEA says, okay, we're going to now be releasing our documents or whatever, and on, let's say, Ethereum, then that's certainly something that I'm going to be looking for, is which one are they using? Because if the government's going to start choosing winners here, I want to own it. Now, if we look at, let me real briefly type this in, which I did not have a chance to do it. You guys know I love the curveball questions. Thanks, Big Eb, for that one. From left field, I got it. Boom. Grab that one out of thin air. Let's go to World Liberty. Not Liberty. How about Liberty Holdings? There are different sites out there that track World Liberty Financial's holdings, and let's go what they've got right now. They got a lot. You can see here they've got $500 million of assets in their fund right now, and you can see right here. Let's see. Let's see if we can sort by largest balance. I don't know about you guys. Doesn't that look a little bit suspect? For the podcasters, you can't see that. Their number one holding, 66% of the portfolio of World Liberty Financial, which is controlled significantly by the Trump family, is Ethereum. It's their number one holding. And this further bolsters my argument for Ethereum being the dominant player for now, because not only are we seeing the treasuries, but we're also seeing maybe a little bit of political side pushing Ethereum here. Because I can't imagine, if you go down here at the bottom, knowing Trump made this announcement today that, okay, we're gonna be putting this stuff on the blockchain, if you notice down here at the very bottom, he owns 0 Avalanche. 0. Do you think that he would be using Avalanche's blockchain? Probably not. His second largest holding in this whole thing is really stable coins. He's got Tether, USDC, and he's got some Bitcoin. Only 18 million worth of Bitcoin. So Tron is another one, but really it's kind of obvious when you look at how much he's holding of ETH that would be most likely the winner here. Anyone know of an ETH ETF? Yes, Andy, it's ETH-A. I will bring it up for you here. I don't know where my chart is. For some reason, my chart, there we go. Let's go ETH-A. This is BlackRock's Ethereum Trust. So that's the one that I would be looking at myself if I was going to buy an ETF. Obviously, I would much rather have the outright shares or outright coins of Ethereum, which I do. I have plenty of Ethereum, more than I want right now, but it's okay. Very gappy. Yeah, because remember, this doesn't trade 24 hours, but crypto does. So as soon as, information happens overnight, these are always going to have big gaps on them. Very gappy. And it has nothing to do with illiquidity, right, Margaret? Usually when you see gappy securities like this, it means they're illiquid. But not, this thing today traded alone 43 million shares. And it's a $33 stock, or ETF. A couple days ago, you had 135 million shares traded. And if you look at this, look at the volume at the bottom of the chart here. That tells you something. At least it tells me something, right? It tells me more and more people are getting interested in this ETF. And it's very clear. As demand comes surging in, the price of it's going up. Yeah, exactly, Margaret. Yep. Really nice increase. Really steadily increased. Now, it's definitely dropped off over the past 5 days or so because of that big spike. But if you take the long-term view of it, more money is coming into Ethereum. And, I mentioned on the show the other day that you have the treasuries, which are going to be a big factor. You also have the layer 2 solutions and major corporations using Ethereum. My guess, building a layer 2 on Ethereum, if I was the US government, I wouldn't use Ethereum outright and just plug into it. I would build my own layer 2 solution. I'd build a US government plugin, right? A layer 2 for the US government that would plug into Ethereum. So I could now have my own closed loop system if I wanted to that sat on top of Ethereum and utilize Ethereum as my record keeping system. So it's really interesting now seeing, and you know, whether you, again, you could love Trump or hate him, it doesn't matter to me, but it's really interesting seeing how he has parlayed his crypto, not only his platform of making us one of the crypto leaders, but now making himself and his family extremely wealthy off of crypto, right? They are raking it in off of cryptocurrency. Am I mad at him? No, he's just a businessman, right? He's got the most powerful stage in the world. He's manipulating the crypto markets to benefit his portfolio. And, you know, as Margaret sent me a video on X today, or yesterday, where Paul Atkins was talking about Project Crypto. And I think you would agree with this too, Margaret. In that interview with Atkins, who's the chairman of the SEC, he replaced Gensler. It's quite literally a 180-degree turn in attitude and sentiment towards crypto. Gary Gensler was like, stop it, crushing crypto at every second, suing anybody without any information. Atkins and his team are actively saying, we want to be pro-crypto. We've got the mission from Trump up above saying, I want America to be the leader in crypto, so let's make it happen. And all of a sudden, we're getting a great push by the SEC to regulate, but not to regulate through enforcement, regulate through clarity. And that's what most of the community has been asking for in the crypto space, is let's not regulate through authority and you know, slapping fines on people. Let's explain what goes on. Let's explain how I can become a legitimate business in crypto without facing the wrath of politicians and lawsuits. So I think, if you've been in my crypto class for the last couple of years, I've been saying that this is what I've been like hoping for, is all of a sudden the tailwinds are pushing aggressively for crypto. I was in I did a presentation this morning for the Trading Academy students in Dubai, and I went through kind of how all the different market segments, whether you're talking real estate or even futures, options, Forex, whatever tradable market, the winning is exhausting. Well, with crypto it is, right? We keep hearing about other things that, you know, the winning part, but yeah, certainly. I didn't know it, Rob. I believed it was going to happen, right? In hindsight, I could look back and say, well, I knew it, but I didn't know for certain. But it does feel great. And I've had a lot of naysayers along the way, right? There's been a lot of people like, Merlin, you're out of your mind, you're crazy, crypto's a scam, it's a fraud. And I still contest that most of crypto is a fraud. But, you know, I don't care whether people disagreed with me or agreed. I put my money where my mouth is, and this winning is getting exhausting, as Big F says. One of the 3 big goals is to make the USA number 1 in crypto. Yep, 100%. And as soon as I heard that on the campaign trail, you know, for me, let's not talk about who I voted for, doesn't matter. But looking at just his talk track about crypto compared to Kamala Harris, if I'm looking at only the crypto side, it's a no-brainer who I was choosing. Right? Now, obviously, there's way more factors that are more important to society than cryptocurrency and digital assets. But as far as my financial well-being, Trump was the easy choice for crypto, right? Because I had a good amount in crypto, and since he's taken office, it's been pretty darn good for my portfolio. Let's see. Which ETH chart do you use? Coinbase? They're all pretty much the same. So when you go here to TradingView, let's see. I think I'm using Coinbase. So let me see here. Let's go to ETH. No, let's see. For some reason, I've got it on Bitfinex. Not that it really matters. It shouldn't be that far off market. These should be pretty darn close, whether you use Bitfinex. By the way, for those who don't know what I'm talking about, if you open up TradingView and you go to add a new symbol, so let's go here and go to add a symbol, and you go to crypto tab, and I type in ETH. Let's put it right there. ETH. You can see here Ethereum dollar, Ethereum US dollar. They're all on different exchanges. So you got Binance, Bitstamp. I'll use Coinbase. I'll just add Coinbase to my list. I'm going to add Coinbase on here and move it up just to see what it looks like compared to some of the other ones. All right. So we got ETH up there. And right now, ETH on Coinbase is about $8 cheaper than it is on Bitfinex. So I'm going to use Coinbase anyway because Coinbase is super liquid. It's domestic. And now the chart is pretty much identical. Les says, if crypto is decentralized, how could the U.S. be number one? So it's not about, not everything is decentralized, right? So with crypto, you're trying to make it a place where all the developers, all the builders, all the projects want a favorable environment to work with. So let's take Ethereum. It's a great question, Les. I actually love it. Let's say we take Ethereum as an example. Ethereum technically doesn't have a head, right? It's a decentralized network. Now, there are different development teams. There's a community that's decentralized that are, sharing code and updating the code base, but that's all done decentralized. Does the government control Ethereum? No. But by the government saying we're going to be crypto friendly and then telling the SEC to establish clear rules, Ethereum can now most likely thrive in America without legal repercussions. So you're creating an environment that's favorable for decentralized projects or centralized to say, hey, we can flourish here without needing to worry about lawsuits and regulators coming down as they are in many other countries. So not only are you encouraging the projects to build here, but you're bringing in more developers from around the world, and the money will come to the United States as well to say, hey, these projects in the United States, these projects are in the United States, I want to go there. So I think that's the big reason we want to be number one. We want to set the rules for cryptocurrency. We want to basically say, yeah, we've embraced this first. Come to America if you want to build and be part of the best crypto community in the world. I think that's really what it boils down to, Les. Yeah, they can't control all the decentralized stuff, but as long as you make it favorable, if you think about, what are one of the things that make Vegas so great? You can pretty much do anything there, right? We can leave the list off of the chat, but in Vegas, you can pretty much do whatever you want. It's like there's something for everybody. Let's make it a party city. And the more you do that, the more people are like, well, yeah, I'm going to go to Vegas because I like strippers. Okay, great, you can go there. Oh, I'm going to go to Vegas because I want to go fire rocket launchers and M16s. Well, I'm going to Vegas. I want to go to Vegas because I want to see the top-notch DJs in the world. I'm going to Vegas. So I think in a similar analogy, Vegas has created this oasis in the middle of the desert where you can pretty much do whatever you want. I remember years ago, you couldn't smoke weed. You'd get arrested on the street if you even had one puff of weed. Now, they've legalized that too. So freedom is what you have. And I think that by really pushing this agenda of let's make America the hub for crypto for the world, you're doing so, you're making it a safe haven, but you're also making sure that there are projects that do not ruin investors' lives, right? So I think the big challenge for the SEC going forward is going to be looking at projects like Trump Coin, hate to say it, like Melania Coin, like Pepe, like Floki, like Bonk, like Fart Coin, or whatever these stupid ones are, because they serve no purpose. They are straight speculation and gambling, and to me, that damages the reputation of crypto as well as the financial well-being of the average American. So the SEC is going to have to draw a line here at some point saying, okay, what can and cannot be here? Overall will be favorable to crypto and allow, Ethereum, they got a great development team, good product. Chainlink, doing wonderful things politically as well to, be a better project. You've got things like Avalanche, being used by Amazon. So these are big projects being used by big companies. Yeah, they're fine, they're welcome. But then you go look at something like, as I mentioned, Pepe. Pepe's going to go to zero, folks. This will go to zero. I promise you. Promise you. Right? It's going to go to zero at some point because the government's going to go, wait a minute, this is nothing. This doesn't do anything, serves no purpose, it has no team, get rid of it, right? Chainlink versus ETH. Well, you're talking apples to oranges, right? If you guys want, it's already zero. Not really. Some of these things can go 0.00 all the way out to 15, 16 decimal places. It can get really small. So if you guys want, I can explain the differences between Chainlink and ETH, but they are not even remotely the same. Ethereum is a layer 1 blockchain. Chainlink is an oracle. That's like saying one is a baseball team and the other is a golfer. Completely different how they function. No, not even remotely close. Okay, so let me throw those two on top. You wanted ETH with, let's bring up ETH, and I'll throw on Chainlink. Okay, so there they are on top of each other. you have a fairly tight correlation because remember, Chainlink was built initially on Ethereum. Now Chainlink is a multiple blockchain asset, so it can be used on other blockchains as well. For those who don't know, an oracle, which is what Chainlink is designed to go out and retrieve information from the real world and bring it back to the blockchain. Ethereum, the candlestick price chart here, Ethereum is just a data record keeping system. That's all it is. It doesn't go to the outside world. It doesn't know the weather, doesn't know sports, knows nothing other than where is all the ETH at every second of time. It's just a perfect record keeping system. Whereas Chainlink, it's actually going out and retrieving sports scores and weather and presidential election votes and whatever you want for your data set. It can pull up all that information. So very different in mechanics and how they function. Who uses Chainlink? Any smart contract within crypto. So if you're using a decentralized marketplace like PancakeSwap or Uniswap or Thorchain, maybe not, but a lot of times they're the smart contract, which will be basically an envelope with crypto inside of it, waiting for conditions to be met. It references the oracle, and the oracle will get the information needed for that smart contract. So for example, let's say, Margaret, where are you based, Margaret? I'm out here in Southern California where I'm sweating. It's hot, and again, the AC makes it really tough up here. So Margaret's in the Midwest. Okay, so let's say I bet Margaret that the weather in Las Vegas on next Thursday is going to be at least 110. At some point during the 24 hours on next Thursday, it'll be 110 degrees or more. Margaret's like, no way. There's no way it'll be 110 degrees. Okay, so Margaret and I make a bet. And let's say we use the Ethereum blockchain. So what we do is we create a smart contract. And that smart contract says, Margaret deposits $100 worth of ETH. I deposit $100 worth of Ethereum in there. Now, our $200 worth of Ethereum is locked in that smart contract. The only way that it can now be released is at the end of or at any point during the day on Thursday, if the temperature is above 110, it gets released. So how does it work? Well, over the course of that day, the oracle is checking temperatures. And it's written in the smart contract. It says, use Chainlink to determine the weather in Las Vegas for this 24-hour window of time. And if at any point it's over 110, it pays me automatically. There's no question about it. Instant transfer over to me minus a transaction cost. So that's what the oracle does. The oracle is responsible for retrieving information. Almost any smart contract in crypto uses an oracle of some kind. Now there's Rep, Augur, Band Protocol, there's Pyth, there's all sorts of different oracles out there for different purposes. Let's see. Hope going to the beach, it works. Oh, I love Huntington Beach. So can the oracle retrieve any and all info from different places? Yes. Absolutely. If you really want a great knowledge base in this, I'll tell you, here's a really good one. Let me bring this one up here real quick, and I'll put it in the chat for you guys. This is Lex Friedman again, and his guy's name is Sergey Nazarov. So Sergey Nazarov is the guy that created Chainlink. Very interesting when you watch this. I'll post it in the chat for you guys. Let me know if you got this. Very interesting to see the importance of true, honest, respected data, right? Because anybody could be a data provider, but I think you guys could see that the ability to manipulate data is a multi-trillion-dollar business. If you can slightly deviate the numbers on that data and you're the oracle, the one bringing the data in, you can reap havoc on contracts. So he talks about the reliability of oracles, the role, how they function. It's a 3-hour interview. So it's definitely a long one, but it's great mental stuff for anybody who wants to understand the ins and outs of an oracle. This is the 3-hour one, Tofi. There's a 5-hour one by Charles Hoskinson, which I think is even better. Charles Hoskinson one is awesome, Andy. Thank you. Is sports betting on the block or oracle? So sports betting would be on the blockchain. So the contract, that envelope that has the wager in it, so that in that example I gave you, Margaret, of you and I making a bet on the weather in Las Vegas, that contract, think of it like this little envelope, right? Here's our contract right here. It plugs into Ethereum. It just sits in the Ethereum blockchain. Inside, there's a bunch of writing on here. It will say, use this oracle, and all the terms of that contract are in this piece of paper. As soon as those terms of that contract are met, smart contract gets paid out and disappears. Done. Right? So yes, it resides on the blockchain, the respective blockchain. Great questions today. Totally off topic, but hey, I like it. Knowledge is power. Okay, let me go back before we, oh man, I'm already way past due. Let's talk about this real quick. Nvidia drivers. And I thought this was really interesting. And for those of you who are Nvidia holders, this might give you a little bit of pause with regards to what you should be thinking with Nvidia. And the reason I say that is, this is from Yahoo Finance, really cool stuff. The percent contribution to Nvidia's revenue, right? So this is what percentage of Nvidia's revenue is coming from some bigger companies. 18.87% of their revenue is coming from Microsoft. I was dumbfounded when I saw that. That is a monstrous risk factor to Nvidia, because all it's going to take is Microsoft to go, you know what? We're going to cut back on our CapEx spending here. We've already got enough, right? That is an extreme vulnerability when you have somebody that big is almost 20% of your total revenue. Amazon 7.52%, Meta 9.33%, Alphabet 5.6%, and Tesla is only 0.95%. That's crazy. All American companies, absolutely. And that's a good question, Margaret. It's like, well, what does China contribute to this, right? What are they going to start taking over here and buying more? Or are they going to use the Chinese versions? They are all buying Nvidia, Rob. Absolutely. They're buying their chips. Now, look at the second slide here. This is the percent of CapEx spent on Nvidia chips. So Microsoft is spending almost 50% of their total CapEx, capital expenditure, on Nvidia's chips. I know, Big Eb, I know you're screaming long on Nvidia, and I'm bullish on Nvidia as well, but this just made me just kind of stop a little bit in my tracks and go, man, this is a massive risk factor. Like, really massive. You know, if we watch Microsoft's earnings, and let's say their next quarter they come out and they drop on their revenue a little bit, what do you think is going to get cut? CapEx spending is going to get cut significantly. So if Microsoft continues to boom, great. But at some point, I've mentioned this several times on the program, at some point, Microsoft's going to go, we got enough Nvidia chips. We're good for now, right? I don't know when that's going to be. I have no clue. It's a little bit of a warning sign. And by the way, let me finish reading the percent of CapEx spent on Nvidia chips. Number one, by a monstrous margin, Microsoft at 46.96%. That's unbelievable. Meta, 25.44% of all of their CapEx is spent on Nvidia chips. Alphabet, 15.44%. Tesla, 13.46%. And Amazon rounding out the top five at 10.63%. That is really, really impressive numbers. I mean, that is so much revenue. And if I go back to the first one here, if you look at just Microsoft, Amazon, Meta, Alphabet, and Tesla, you're looking at, let's call that 25, 26, 35, 40. Roughly 40% of NVIDIA's revenue comes from those five companies. That's crazy. Yeah. Thanks, Big Guy. Roughly 40%. That is a gigantic number. So anyway, just wanted to throw that out there because I think it is important. And, you know, in any investment that you're in, certainly we can have our optimism. Certainly we can have our justification for being long or short, but we can't ignore specific data points. And not that this is saying it's the end, but it should be a red flag that much money is coming from Microsoft. Microsoft is really, really scary. I agree, Steve. It's not a great position for NVIDIA to be in. Totally agree. NVIDIA, in my opinion, has significant vulnerabilities. Even though I love them, I'm currently long NVIDIA, and I hope to stay long on NVIDIA. We'll see what happens here on Friday. But the challenge is you've got 40% of your revenue coming from five companies, and 93% of all of your chips are coming from a Taiwan company. That's controversial with China and the United States right now. So those are two big, potential issues. But right now, looks like that train keeps rolling. Now we can bring up the NVIDIA chart for today. It did not open positive. I thought we'd see it gap up and be positive on the open. We didn't get that. Let me get this out of here. Bam. Let's go NVDA. And you almost got back into positive territory on the day. We're only down 0.79 on the day. Not that bad. At one point we were positive for today, but looking okay. Honestly, I don't think it's that big of a deal. Let's see. Toby says, I bought some NVIDIA for my PC. I guess my purchase doesn't count. Yeah. Your percentage of CapEx is a rounding. It's like 0.00000000001% of their CapEx. Yeah. Yeah, not too bad. Have a 180 put on NVIDIA for tomorrow. You might get it. It'll be right where it's at. You'll catch your premium. It's going to be a close one. It'll be close. I still think you can rally. What happens when China invades Taiwan? What will they do? Rob, that's a great question, and that's my scenario for a black swan. My scenario for a black swan is that China invades Taiwan and then says, we're not going to be sending chips to the United States. That would literally just cut us off at the knees. Margaret said it, and I've been saying that too, and I hope it does not happen. It's not just if China invades Taiwan, okay? If China invades Taiwan and takes over Taiwan Semiconductor, there might be a slight disruption, but not too much. What will happen is if China goes and invades Taiwan, the United States is going to defend Taiwan, and that will escalate this thing exponentially in a very short window of time. If China were to go in there and take over Taiwan Semiconductor and say, we're not sending any chips to America, just like you're not letting Nvidia send stuff to us, then I think all hell breaks loose. And let's hope it doesn't happen, because losing the power to build technology and to build AI, and not that it's gone completely, but it could be very damaging to our economy. It certainly would be one of those things where if you heard that China did in fact invade Taiwan, I can't tell you what to do with your money, but I would liquidate my portfolio immediately and try to buy deep out of the money puts cheap as I could, because it'll probably tank. What does Larry Jacob have to say about Nvidia right now? I don't know. Hey, Larry! He's not here. Maybe I'll see if I can get him on. Are we going into war then? If China invades Taiwan, yes. Pretty sure it'd be in war. Yeah. Steve says Intel starts looks a little bit better. Yeah. That certainly does. Certainly does. And we can see Larry is in Indiana, but he's been traveling a bunch doing some teaching. So he's kind of all over the place. All right. What else did I have on here for today? I wanted to bring this one up because I think it's, I want a BYD too, Lisa. At least I want to check them out. They look fantastic, and from the reviews I'm seeing, they're just absolutely amazing. But I want to talk about this one real quick, and then I'll go through the markets and we'll wrap up. I'll update you on my trade too, because I made one trade today. Housing market. We've been talking about that 10-year bond and how that impacts 30-year fixed rate mortgage. And a lot of people have been asking, like, well, how does that impact it? Well, look at the 10-year right now. We were down about 0.78% today on that 10-year. We're at 4.2%. And you can see it's just drifting lower and lower and lower. Right now, you got 4.187 is the floor. Other than that, we're dropping to 4.125. Right? It's going to happen very quick. Well, take a peek at this chart. This is also from Yahoo Finance. This is going back to January of this year. Early January, we had mortgage rates over 7%. This is the lowest they've been since October of last year, which is surprising given what the chart looks like. So we're at 6.56% for that 30-year fixed rate mortgage, which I know those of us who have our mortgages in the twos are like, 6%. Ugh, pshaw, don't waste my time. But again, affordability of housing. When you look at this chart, qualifying for something at a 7% 30-year fixed rate mortgage is much more difficult than qualifying for that same price house at 6.5. So this is very good from an economic perspective. The lower this goes, the more likely we're going to start to see new home sales, pending home sales increase, existing home sales increase. As that happens, we'll probably see the Case-Shiller Composite S&P 20 Composite Home Price Index start to rally as well, which is really, really good. Let it drop some more and make real estate affordable for many. I agree. I think that let it drop more. Problem is supply, right? So this is one of the drivers of demand, right? If your 30-year fixed rate mortgage is one of your drivers of demand, but supply is an issue, right? Are we gonna the easiest way to drop housing prices is to build a lot more homes. And ultimately, you're seeing some areas that are building a lot more homes, trying to depreciate price. Like around here, there's tons of new home construction going on because where I live is a fairly desirable place. I know many of you hate the politics of California. I'm not a fan of the politics either, but it's a pretty nice place to live. 6.5 is about a full point less than the historic norm. Still great, right? Take it. Okay, let's see what else I have on here. So here's the my updated. So this is updated, including the premiums taken out. So the only two I added, I got the 110 strikes on CoreWeave yesterday, which CoreWeave had a nice pop today. I'll bring up CRWV here for you. CRWV. So we had a good pop in CoreWeave today. It was up about 6%, which is great. My calls on that CoreWeave position are for September 5th. So that's not tomorrow, that's next week. And also with MicroStrategy, as you can see here, I sold the 380s. I didn't really want to sell the 380s, but I just don't think it's going to rally that much by next Friday. So I collected $1.80, which added about $1,000 in the pocket because I got 600 shares of MicroStrategy. So we'll look at MSTR. It was not the best day to do it, but I wanted to get some premium. So earlier in the day, I had sold the 380s, which let me adjust this now to give you my price. Go 380 is my strike. There we are, way up there. So I don't think we'll get there by next Friday. If we do, great. I might close it and move on. But those are the new positions added in. And I've got all of my current 6 positions here covered with covered calls. And I'm not looking to add anything else right now. We'll see how these pan out. Obviously, some of these are going to be expiring tomorrow. I've got the Nvidia, the Palantir, and I believe we'll see what happens with Nvidia. Right? I may get my Nvidia taken away. It's currently at 179. So that one might get taken away if we close at current levels. And then PLTR. PLTR right now is at 158. Well, I got the 157.50 call, so it might get taken away from me there too. Cool. Totally fine if it gets taken away. No problem with that. And then I've got my UNH expiring tomorrow. That's at 310. Hey, if it gets there, it does. Great. Not so worried. I do not use a specific theta number. I don't even look at theta. Don't even look at theta myself. Okay. Oh, yeah, you're talking about because I got the holidays and the weekend. Yep, absolutely. All right, what time we got? Oh, man, I have things I got to go do. All right, let me just run through our top 8 markets here, and then we'll wrap things up. But bam, starting at the bottom, we already looked at that 10-year, which is coming aggressively fast into that lower part, about 4.187. Dollar index was down 0.31% today, but nothing dramatic there. It really has just been sideways for the past 3 weeks. Bitcoin was looking great today. We had a nice little rally up to about 114,000 on the futures and then gave it back. We're currently sitting at 112,740, so not the best looking day for Bitcoin. It actually feels like it's going to want to sell off tomorrow the way that long topping tail gave up all those gains. So, Marcus says, what does Powell want for the 10-year yield? Lower. He wants that 10-year yield lower. Unfortunately, if the 10-year yield drops lower, it starts to invert that yield curve even more, right? Starts to invert that yield curve. But from an economics perspective, a lower 10-year bond stimulates growth, and they want that. Russell 2000, again, you've got almost a shooting star here on the Russell. It was up 0.11%, but finishing rather weak. Most of these markets did, except the S&P. S&P broke through that 64.90 mark. All-time intraday high, all-time closing high for the S&P. As expected, boom, momentum looking fantastic. We'll see how long that continues. NASDAQ as well, posting a really nice day at 0.59%, 23,769. And those all-time highs are within sight. Your all-time high on the futures is 24,068, and we are currently at 23,769. Crude oil, 0.7% pop today. I thought we'd see some, a little bit more downside move. Didn't. Just kind of rallied back up. Showing some pretty good strength here on that crude oil chart. 64.60 is where it's at right now, and it's right back up into that supply zone. But remember, the more times it hits that supply zone, the more likely it goes away. And finally, your victor for the day, gold, which actually is starting to become interesting. It's been doing nothing forever. And now all of a sudden it's starting to rally back up. It's outside that little blue line there, which is, you can see, rallied a lot of the peaks. Now it looks like it's headed towards all-time highs again. We'll see how that pans out. All right. That is going to do it for me for today. Let's go look at your economic calendar for Friday. As was already mentioned, the big thing on the calendar will be your core PCE price index number. All expectations are saying it's going to stay the same, right at 0.3. That would be fine. I think if we stayed at 0.3, we're okay. Given what happened with the PPI numbers, it wouldn't surprise me to see this pop to 0.4. Although if I'm President Trump right now, I am sitting over at the office that puts this report together, which is the Bureau of Economic Analysis, and I'm saying, you want to keep your job? You want it? You want to keep that job? You make sure that this is 0.3 or lower, okay? You hear me? Make sure this is lower or you're going to lose your job. It's going to be here. It's going to go away. You're fired, all right? If I'm Trump, I'm there hammering that table. Because if this thing pops to 0.4, the discussion's off on cutting rates. If it pops to 0.4, I'm pretty sure you're going to see Powell say inflation is a little bit too persistent. We want to be careful here with that one. So this will be an interesting number tomorrow. It will absolutely drive our market. So be careful. That's going to happen 1 hour before the equity markets open. As far as earnings go, you've got nothing. There's nothing on Fridays. Typically, there might be one name on here. Oh, yeah, Alibaba. That's pretty much it for tomorrow. Okay. There you go, folks. We got a 45-minute show today. Not quite the hour show. I'm scaling back a little bit. I'm scaling back just a little bit. But I hope you guys enjoyed today's show. Again, for those who sent in questions that I didn't answer today, I'll get to those on tomorrow's show. For those of you who want something answered personally by me, email me, TraderMerlin@gmail.com. You can send them on in there or put them down below any of the YouTube videos. Of course, I got a whole bunch of those out there. Put them in there, and you're going to travel this weekend? I'm not traveling this weekend. What am I doing this weekend? I'm having a birthday party for my papa, my dog. He's going to have a birthday party. I am going to go, one of my favorite places, it used to be, it's a restaurant that turns into a nightclub. It used to turn into a nightclub, and they haven't done it for like 5 years, and they're doing an anniversary party this weekend, so I will be dancing, having some good times. And I'll be having a glass of whiskey with you guys tomorrow, that's for sure. All right, guys, that's going to do it for me. Have a fantastic remainder of your day. I will see you tomorrow for the core PCE price index announcement and the trading week wrap-up. We'll see you tomorrow. Take care, everyone.